The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, once more into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
That's a little weird. Anyway, what do we have going on today? Well, big pop and a customary pullback. We'll talk about what I've been putting in my newsletter the last couple of days, but I'm showing up 14 points on the S&P cash. I didn't get excited on the downtrend yesterday because of the advanced decline line, and the volume really didn't pick up late into the end of the day. Not surprised that we got a bounce today. Kind of surprised that we got as much of a bounce. We were coming into the market somewhat flat when they peddled a minion, one of those little guys in the cartoon that they keep pushing out. Man, a real minion, to say that you guys took it a little hard yesterday on those FOMC meeting notes. Shouldn't take it that hard. We're not going to be in that big a hurry. Just take a deep breath. Market did, and of course, since everybody was piling on the market, had a lot of shorts to wipe out fairly quickly if they weren't quick on that mouse button. And we went up. Let's see. Let's take a look at it here. Okay, so we were up another 15 points. So yeah, we were up 30 points on the S&P cash. Now just up 15. But there is a pattern that is developing. I don't think people are going to like it, but it is the pattern that I think we have now. So we'll show that here in a minute. But the rest, that's kind of it. Up 255 on the Dow, Nasdaq's up 15. Russell's up 2.5, and crude oil, probably the biggest surprise today, up $1, and that was on EIA numbers at 11. So what else do we have? Well, we'll go through some of these other things going on, but we'll get through a little bit of history, and then we'll get into the markets.
Then it's all just a little bit of history repeating.
It is history repeating, and on this day in 1819, Spanish colonization of the Florida Peninsula began at St. Augustine in 1565 and ended in 1819 with the Spanish colonists. But they enjoyed a brief period of relative stability before Florida came under attack from resentful Native Americans, ambitious English colonists to the north, and carpetbaggers to the west. Former U.S. occupation began in 1821, and General Andrew Jackson, the hero of 1812, was appointed military governor. Florida was organized as a U.S. territory in 1822 and was admitted to the Union as a state in 1845. So, a great state. It kind of sticks out in the Gulf a bit, but that's about it. Okay, we're going to talk about a pattern that I think is developing and develops after a great deal of market consternation, like we had, from that big drop at the tail end of January. The idea is that you instantly go into some kind of ABC down if you're bearish, or you go retest the highs if you're bullish. The answer, more than likely in the past, historically, is that you kind of have a few lower highs and higher lows, and you continue to do that until all the fast money crowd gets out and they kind of beat their heads. And then you get that break of a triangle formation, and then you start moving again. So I'm not going to, as I said yesterday, I wasn't really happy about shorting stuff. I think that we talked about that on Tuesday. I really just didn't like the timing of it. I still don't like the timing of really being long or short for anything more than half a day in this market. My guess is that we're going to probably end up somewhere around 1700, 1710 after all this kind of slowly wrings itself out. The Fed has a, I don't know if you'd say duty is the right word. I think they have a duty to calm this down. And part of that is not let it get back up to the highs where it's going to crash again, and not get down to the lows where everybody thinks that there's something under the bed that's going to go boo. We'll have a lot of people doing the standard drive-bys on financial infotainment TV on cable, coming up with all kinds of reasons why everything happened. There'll be the traditional guys, and then there'll be one or two bow tie guys doing a drive-by to give their opinion. But I just don't see a lot of compelling arguments for a significant downside in the market. Hear a lot of people talk about it. I don't buy those. I also don't buy a lot of the pie in the sky. We're going to 50 billion on the S&P. And I hear there's a little bit of exaggeration on the show from time to time. I don't hear it. But anyway, there's the end of the world crowd, and there's the sky can't be hit. The little beanstalk's going to grow and grow and grow, and it never hits the clouds. It just continues to grow. There's not a lot of middle ground. And normally you either have everybody 80% people bearish or 80% bullish. Right now, I think, as far as I can tell, we got about a half and a half, and I think it's going to go to a draw. And at that draw, we're finally going to probably see a little move. That move is probably going to be a head fake. And then the thing to do would be to fade the other way when it does do it. But we'll see how this works out. But in the past, this is much more likely a pattern. And that is that we're going to have some kind of consolidation. We're going to calm down a little bit before the next leg really starts. And it depends on how fast these things happen. But we're on the 22nd. Fund buying again starts next Wednesday. So really, we got a little bit of fun buying, and that's about it. So we'll figure out how the rest of that goes. But I'm not getting too excited. I'm not willing to throw a lot of cash at the market right now on the chance of a move in the market. I would much rather sit on my hands and wait for a very clear signal. Yesterday, I thought I was getting that signal until I started looking at the internals, like the advance and decline line on the NASDAQ, like the volume in the general markets. I had one out of about three things that I was looking for, and that was price. The other two really didn't come along, and I'm not really surprised that we're kind of bouncing back into this middle ground. Up 12 on the S&P cash. Could we get a little lower, maybe down to 2680 in all this? That's kind of where I'm looking at the downside on this. But I would love this thing to kind of wring itself out for a little while and get ready for the next big move. We'll be back after this.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, there was a ton of negative press today on Snap. So I was kind of interested to see whether this thing had anything in the way of a down move. Well, on earnings, you had that big pop on the 7th of February, 231 million shares, actually almost 232 million shares. And we got 40 million shares on the downside today as it's coming and attacking that. And, of course, lots of gratuitous shots at Snap, from the money that the CEO is making to the fact that somebody that I'm going to say was zero talent, an entire family was zero talent, and no reason that we should know their names. You know who we're talking about. Decided to say that she's not using Snapchat anymore. There's probably bigger things afoot on Snapchat and Instagram and Snapface and Face Snap and all the other ones out there. But if you looked at the chart, doesn't look that bad. So I was kind of interested to see that. We still have somewhere around 7 or 8 days to cover on this. So it's not certainly one I would ever want to be short, certainly under $30, and certainly at $17 with a monster 28% short of the existing float out there. So it's an interesting one. Let's take a look at some other ones. GWPH has been interesting. This is the only legal marijuana company. Spiked a little higher, kind of coming back out here. Oop, that didn't right. Something else, DWPH. Let's take a look here. There we go. Down fairly hard. This is back into the support levels that go from the gap up back on the 7th of December of last year. That was 1.2 million shares on the way up. already 850,000 shares. So it's going to get into this gap with some decent volume. Again, the only legal marijuana company in the, I guess, I think it's based in Great Britain, but the only one with a license to develop drugs using THC. Not exactly sure why this thing popped down as hard as it did, but it certainly did do that. But it's got some decent juice out here already. So my guess is you've got 111.50. If you think this is the answer to opioid drugs, well, you want this thing to test 111.50 and have no volume at it. Looking kind of sad today, though. I don't know if it's going to be able to do that. Okay, let's look at some other ones out here. A lot of talk about the SMHs. So let's look at Intel and a handful of others out here in NVIDIA. Down a little bit, almost no volume. This 46 area looks fairly good for support for Intel right now. I don't think that there's a whole much more to write about. NVIDIA, this one did retest its previous high. It did so on higher volume, almost twice the volume. So it's very hard for me to get too excited about NVIDIA going south. Energy was a little lighter out here, and maybe they've reached peak video card business, but it's kind of hard to tell. A lot of what they've done in the last 6 to 9 months is all cloud business, and you really don't, from the outside, it is very tough to see what numbers are at. There's a lot of confidentiality agreements for these big companies like Microsoft Azure and Amazon Web Services. But you do have some nice volume going back into these highs and pops higher. I wouldn't say it looked horrible. Let's see if I can get that out there. But the energy was slightly off out here. So maybe this thing's in a trading range. Which would be let's call it 250 back to 203, which would be pretty good if it got back in that range. But my guess is that the support comes in this thing at about 225. So not a bad move out there, but I don't know if this thing's actually going to get back there. This is a stock with fairly light visibility. Again, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always put a message in the den. And what else do we have? Wanted to look at a few other things. Let's take a look at the SMHs real quick. Is there anything really horrible going on in these? Probably the only thing is Apple. Apple is having a little bit of volume pulled back, but that doesn't mean that others aren't selling phones too. So when you start looking at the infrastructure after Apple, which we'll do after looking at Apple, it's just not a really bad thing. You've gotten back up here to what is fairly decent resistance on a lot of these stocks. In the SMHs, it's the day of this February the 2nd, came down with 13 million shares. You've attacked it with 14.7 million shares, rotated down yesterday on that. Today, just 3 million shares so far. So consolidation, and that's kind of the way I'm looking at most of the market right here. We want some level of consolidation, maybe even a little bit lower out here. Watch the volume pull out and take a look at it. Okay, got a few more emails here. We'll take a look. So let's look at Apple real quick and see if anything is really exciting in that. I saw it was up higher earlier in the morning. But again, we talked about the RSX yesterday, the equal weighted S&P was kind of doing this. We got Apple kind of doing this. We got more than a few kind of just going sideways. But when you look at Apple, that's it. Sideways action, nothing too exciting. SWKS. You could say it is consolidation. You could say it is distribution. But normally, I don't think in distribution you have the kind of wild movements that we had earlier up today. So what do we have now? So we're up 13 points on the S&P cash. Skyworks Solutions, you're you're in with what, a 1.5%, 2% of the last 3 or 4 days out here. So there's nothing really exciting going on in this one. Let's take a quick look at Avago. Okay. Same thing in it, 4 days. And when you really look at it in the rearview mirror, it's 4 days, now 5 days of a flat, basically a flat market in these. So not surprising that we're going to need to get out of these kind of days where we have wild swings up and down. Eventually, it's going to get boring. Fast money crowd's going to leave. The shorts are going to slowly take their positions. And that is when we're going to find out whether we go higher or lower. I'm, like I said, kind of cautiously optimistic about the market. We're really starting to see the impact in just the last week of these paychecks coming in with a lot less deductions in them. I'll talk about my experience at lunch today. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And looking at Roku today, it opened much lower. This is at best a $10 company, maybe a $5 company. with its current earnings and business model. The only reason it's up this level is, what is it? Let's take a look. Fine. Let me give you the actual numbers. ROKU. Okay. So we've got, it's actually not as bad as I thought. Only 38% of the float is short. I thought it was 50. I think maybe it was at one time. So you've got darn near half of the shares, well, a little less than half the shares shorted, because this is probably as visible as GoPro was, and it did the exact same thing except by half. This didn't go to 100; it went to 58, and of course there just isn't that much out there for a cheap device that allows you to stream to your television set. They say that there's a lot more there. The problem is that they don't differentiate themselves. Netflix, to its credit, figured out very early that it was going to have to come up with its own content, that being an aggregator of others' content, as Roku is, doesn't do much for it. Now, the question is, if Roku starts throwing the money to develop content without near the base that Netflix has, what does that do to it? My guess is that Disney will be the death of these guys, and that means that you get a handful of devices. If you really need yet another device, good service, fine product. They've been around for a while. It's just these guys are setting themselves up for the kind of money that Netflix drags in, and they're going to have a lot of competitors, and they really don't have anything that's any better than a Chromecast or an Amazon Fire Stick, at least as far as I'm concerned. But again, you're going to have to chew through a lot of shorts, and well, you kind of got the first little drop today, but always going to be a wicked one to hold when you've got 38% of the float short. Okay, let's take a look at some other ones. Micron's been kind of gyrating around a little bit. I'm just going to take a look at this one. It's basically at its resistance level. If you were talking about a stock that maybe had some distribution in it, this one probably in the semis looks like maybe one that's found some level of pretty good selling at 44 bucks. It's been that way for a while. Of course, let's go back and look at this thing. Got to 49.89 and still hasn't released what I think is going to be its biggest product. They keep selling it to some of the high-end web services companies. It's not out to the general public. But a lot of these things, new inventions, take a while. You need new motherboards. You need other things. And it certainly looks from what Microsoft is doing and Intel that it's what we should have seen last fall for these guys is going to be this fall. And I think Intel and Micron both have a very good future for memory, and maybe a great upgrade cycle for Intel, because all this stuff is going to mean that they need new chips also. Did we look at Microsoft at all? Not yet. Let's take a quick look. Okay, just kind of going sideways here, about 93. Again, I'm kind of thinking that the market does go up and retest these highs. It just may take a long time to do it. So I am guardedly optimistic about a retest and maybe even higher prices by the end of the year. But my guess is that this market is going to move a great deal slower than you saw in all the previous years, as the excess of cash gets wrung out of the market about as fast as they can do it without blowing up the stock market. So, what else do we have? Go back here and look. Okay. Intuit for Davis. I don't know if that's a first name or a last name. Intuit, of course, always pretty strong this time of year for taxes. Mr. TurboTax out here did spike to 177.51. Normally you get to, I don't know, mid-April. This is a pretty good idea for a short, because they've had their big sales orgy for the for the tax season, and then it's kind of all downhill from then. So a very cyclical seasonal stock in Intuit. Probably a little early to start pulling the plug on it. Got another one going out here asking for UGAS. Hang on a second here. Or is it UGAS? UGAS, isn't it? There we go. Natural gas. Do I really see anything in this? You know, the best thing for a low price is a low price. And I think you're going to get even more lower prices in natural gas. Someone was asking me about this. Let's take a look at UNG real quick. Was asking me about this last week. And I still said that the biggest problem I see for natural gas, let's get back into this here. The biggest problem I see for natural gas continues to be that they are, that it is being flared, especially in the Northwest. And literally, they don't see that it's got enough value that they just are throwing it away. And that kind of tells me a great deal. That is, as soon as it does become valuable enough to actually not throw away, there are going to be a lot of people standing in line for natural gas. I continue to say what I said before, going to vacation in Christmas, and that is, as far as I can tell, is it G-Log? Yeah, Gas Log, some of these other ones. I'd be looking at these back at support once again, like Gas Log, and what was the other one? Somebody in the den probably knows. What was that other one? It's not Gas Log. It's the one I liked. It went up to Christmas. Mr. Fletch in the den, which one was the one that you bought? Goler. G-L, what is it? G-L-O-R? G-O-L-R. What's the symbol on that? GLR? G, waiting for them to type it. I can look it up. GLNG. Okay, that makes sense, doesn't it? Let's take a quick look at that one. This one seems much stronger. Got a nice bounce out here, a little bit of a pullback. I'd still like this thing to get back probably into the $26 range. You may not get it. You're at what, just under 27 here, right around 27, 27.30. It doesn't look bad here at all. It certainly looks like a fairly decent setup for an ABC. We'll do the numbers on this one when we come back. But to me, liquefiers and transporters of natural gas are still the way to be in that sector. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And another question about my call for TLT to 116. We got to 116.51. Is that it? Man, this bounce today isn't much of anything. Do you get a couple more bounces up just a little from yesterday's close? You could, but my guess is that you're so close to this 115.49, which is the, what is that, the December 16th, 2016 low, that you're going to get into that. Just the reaction in the dollar, which was far more extensive than looking at the TLT, kind of also tells me that these maybe get a little bit more divorced. But you know, you've got, what, a buck down after this move from 128.58. Don't see much in the world else changing out here. The only thing I disliked was, and the reason I'm not short is that this actually, we took the first, and we're short the newsletter in the TLT on the September 7th, moved back down to the October 25th move of last year. It bounced. I was hoping for a test of 129.56, never got it. And when we did get close, the volume actually increased. So it's not beyond the scope that a lot of people would have thought that we were going to retest 128. But man, when we got into those 124s and 125s, it continued to act horribly. I mean, very horribly. Now we're down fairly decent energy. In fact, much better energy than the March 13th, 2017 to the September 7th, 2017 high by 25% more energy on the way down. So you certainly have a lot of juice down here. You've got that high volume low of December 16th, 2016 you want to test, if not just the March 13th. Low at 115.98, but so close now, I can't imagine that we don't test it. Where things have happened, but I don't think I would be doing anything here until we test that low. When we do test that low, my guess is we're going to see some fireworks, and that may set up the low to go long in the rest of the markets in the NASDAQ. That may just be a day or two. I was hoping it was going to be today. So what else do we have out here? Let's take a look at some other ones. Okay, I want to look at, got a question on IBB. IBB kind of disappointing that it is what it is. I thought this one would be a little bit better this year than last, but it still looks fairly weak. We'll zoom in on here. We got a little bit over the 50% retrace to 118.16 would be the retrace. We got to 111.54. Which is just a little shy of the 112.32, which would be the 618 retracement. But I kind of like the way it is pulling back here. It is doing it on lighter volume, nothing really exciting, and a lot of new drugs in the pipeline that look like they're going to be rather significant. But of course, there's a handful of these that are doing rather horribly, and that continues to weigh on the IBB. This one's a little weaker than the other ones that have been going sideways, but well, you got 3 days of sideways here now. And, you know, if you got a little bit more of a pullback out here, could this be a little kind of complex ABC back up to the 119.30? I think it could be, so we'll keep an eye on that. I got a question about Qualcomm. I thought Qualcomm, you know, it should be something like 80, 85 bucks. It is not. That tells you what the market is thinking, and that is come hell or high water, Qualcomm is not going to let Avago buy them without moving that up. And of course, Avago continues to have kind of wild pot shots at the market. So, man, you know, you're into this candle down to 160 or $60.50. This is still probably the most valuable company to buy out in all of cell phone land. So they're going to have to pay up for it. And the question is whether or not they're going to always have to pay the toll to Qualcomm, who pretty much owns LTE and the fifth generation cell phone networks. They've got all the patents already for those. They pretty much control all the low-level equipment on the backside. So I don't know how anybody gets around them. So, you know, Avago, I would love to see Qualcomm buy them and be long Qualcomm at the time, instantly sell it, and then go short Avago, because Avago's got some kind of ridiculous PE. I think it's 200 or 250 or something. This may be one of the bigger ABC downs, but this is a company that's leveraged worse than some of the biotechs were. What was it? Vertex? Was that the one that continually bought everybody out? And then we found out that it was kind of all a accounting house of cards. Maybe I'm thinking another one. I think it was Vertex, wasn't it? But you know, you basically got a 50% bounce on Avago. But if I was looking for stocks that I thought that if the market was going to go down, this would be one of the ones I would suspect that's going down. Qualcomm, they buy them, it's going down. The market pulls back. These guys with their sky-high PE are going to go. Oh, Valiant, thanks, Basil. Valiant, yeah. You know, you got your 50% retrace on this one. This one, if the markets at all fade again, this thing is going to take a giant beating, because these are the kind of companies that people want to run from and sell, and don't even think a second time at looking at them. Let's take a quick look. I want to AVGO. Let's take a look at this. Okay, statistics. Sure, statistics, short ratios. Dividend. Where's it at here? Come on, Mr. PE. Where are you at? Gross profit. EPS. Is that right? I don't think that's right. It says 4. Oh, diluted EPS. Okay. These guys have bought everybody. Oh, the debt is crushing. So, yeah, this would be a good one, I suspect, if the market pulls back, Apple starts going lower. even if they buy Qualcomm, that's probably going to hit them. My guess is it would cost them $30 in the stock price the day that they bought Qualcomm. So you may have several reasons. Any which of them would hit Avago. I don't see anything right here that says to pull the trigger on that trade. But if I was thinking about ones that have problems, Avago would be it. Thanks again, Basil. I couldn't remember it was Valiant. Yeah. All these stocks kind of come and go. Okay, see if there's any other ones out here I wanted to look at. SPG. Oh, we'll come back. Simon Property Group. This thing's back at the lows. See how it did. Yeah, high volume lows, still problematic. Little bounce out here today. These things still look horrible. All these REITs, higher interest rates equal lower REIT prices. We'll be back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Okay. We'll get to that. Got an email here. We'll just about have time. Okay. Square looks like it's getting ready to pop like a teenager zit. What's your thoughts, Hector in California? Hector, it does kind of look that way. Couple things. This is a fairly recent IPO, and I took a look at everybody in this thing, and they're not out of it. They either think it's going higher or they're going to continue distributing it. I'm not a big fan of recent IPOs and trying to short them until I know that the people behind them that have cash in it are out of it, or at least enough of them are out of it that it matters. This is where you find all kinds of self-serving articles, and suddenly analysts coming out saying that Square is going to the moon, and you're short these stocks, and they're using all manners of propaganda to hold it up. Why that still happens other times in the market, there's fairly vigorous defense of Square, and I think you could make an argument that the blockchain Bitcoin kind of guys have stolen a lot of its thunder. But guess what? What would you think if they came out and started really having some kind of Bitcoin related news? The thing would run fairly good. When we did I look at that? No, I didn't. Again, I'm kind of cautiously optimistic, and my guess is that you would want to think about shorting Square until it tested 49.56, the November 24th high. So I would just say keep your powder dry. I'm looking to buy some pullbacks here, maybe in the next few days or a week, after the market kind of wrings itself out of its excesses. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.